Supplemental property taxes. If you're buying a property in California for more than it last sold, chances are you will be receiving a supplemental property tax bill in the months following the transaction. Let's talk about supplemental taxes. First, in order to understand supplemental taxes, you need to understand the California property tax system as well as Proposition 13. In California, the way the property tax system is set up is when a property is sold, its assessed value for property tax purpose is adjusted to the sales price of the property. Proposition 13 states from the date of the sale, the maximum property tax increase is limited to 2% per year. For example, if the property sold in January 2020 for a purchase price of $400,000, then the maximum price adjustment for 2021 would be $408,000. So if the housing appreciation rate is 5% consistently for the next 5 years, the max assessment allowed by Prop 13 is 2%. So let's say you buy a property for $400,000 and the amount it assessed previously for was $300,000. Once you close escrow, the property will be reassessed for the purchase price of $400,000. To determine the supplemental assessment value, it will be the difference between the previous assessed amount and the purchase price, or $100,000 in this case. The supplemental amount can either be a positive amount or a negative amount, but it's usually a positive amount. The fiscal year runs from July 1st to June 30th. The supplemental tax or refund become effective the first day of the month following the sale, and the amount is prorated based on the number of months left of the fiscal year. Here's the table to multiply the number of months times the assessment. So if the supplemental assessment value of $100,000 or the increase in value, you would then take that amount and multiply it by our tax rate in your area. The average tax rate in San Bernardino and Riverside County is 1.25%. So in this case, it would be $1,250. You would then take that amount and multiply it by the factor for the number of months remaining. Since the supplemental tax goes into effect in October because of the sale closed in September, we would multiply that times 0.75, giving us the supplemental tax amount of $930. If you close between January 1st and May 31st, you will receive 2 supplemental tax bills since the new fiscal year begins in July. The supplemental bill counts properties' change in value for the 12 months of the coming fiscal year. Keep in mind that these one-time supplemental property tax will not be paid in your impound account, so you will need to take care of that yourself. This can be a very confusing topic, and I'm here to help.